Hi, hello everyone. This is me Ishwaran from A Group, and I'm here to present a topic based on commodity. Just before getting into the topic, I just want to convey one information that whatever information is going to be provided is completely recorded based upon complete care, and none of our company or affiliated companies are responsible or providing warranty or guarantees to the accuracy and to the completeness of information. Now let us move on to the topic. Today we are here to see about the commodity trading for beginners. So what is a commodity and what are the shares? First of all, let us look into the path of difference between both these. Difference between shares and commodity. So I just compared share and commodity based upon, whereas share for the process of by minimum of one share, maximum is unlimited, value is fixed by the company, and moreover commodity, when comes across, you can buy a product from a commodity based on lot size and individual particular, and just like share, it cannot be bought. So just like getting a product of oil which costs around per liter, it may cost around 50, just similar to that. Over here we can see across, you can buy a particular product at based on lot price. So when you come across to trade time, share basically starts at 9 a.m. and goes across till 3:30 p.m. Whereas initially the share starts to trade across at 9:15, so it will take across 9 a.m. And whereas commodity starts across at 10 a.m. to and runs across up to 11:30 p.m. And trade generally trade is been so trade BSE and NSE. BSE and NSE are the place where listed companies are presented in the share market, where the companies are listed down, where the share traders come across into the play to buy across shares. Whereas multi commodity, that is the MCX multi commodity index, generally speaks about commodities and where product is being sold, where different sides of international market are coming across in, whereas BSE and NSE is a place where nationalized market are coming across into the play. Market, when you see across the difference between market, over here shares also have features, and only in case of commodity only future market and options are available. Whereas termed, in case of shares they are actually termed as equity shares, whereas in case of commodity they are categorized into two, that is mini and mega. Whereas availability, shares are in huge number, whereas commodity countable around 26 product, that's what. Participation, more number of companies are involved, whereas involvement of different countries are existing. Volatility less when compared to commodity, and when compared with shares, the commodity is having a high level of volatility, since it is brought across in lot size, hence the fluctuation level goes across in a different range when come across to share. So now let us look into the difference between investor and a trader. So who's actually a trader and who's actually an investor? And in terms of period, let us say a person who holds a stock for a short period, it may be a week or it may be a day, he is the person who comes across in the category of trader. Whereas investor buys and holds and certain sets of principles that he follows, he is stated to be an investor. Whereas capital growth, look price movement, if price goes higher, trader may sell the stock. Later on, when it comes across to investing is an art of wealth by compounding investing and dividend over the years by holding quality stocks. Investor actually makes a right sets of choice by analyzing a certain sets of product, then he invests across and waits for kind of long term of tenure, and later on he rips his invested fund later on, and he actually attains a good return from his through his investment. And moving across to the risk, trading high risk and high return are possible. It takes a while to develop low risk low return in short run. So it is also part that investor may come across, any investor who's coming across within the period of 6 months, and within the 1 year, he generally considered to be a short-term investor, and the amount of investment that he's going to make is going to provide him only based upon the company's growth, and he waits across to the share to grow, and in case if he's looking forward to hold it for a long time, then he is going to get a better set of return. Whereas trade is something you take across high return, high risk in just that particular week or that particular day, and you go across to sell, or you can make an intraday transaction within that particular day, and you go across to earn profit, or you may even also gather a loss. So trade and investor has a one common thing is that high risk, the high return is also possible in both the cases. Whereas when we come across in terms of art, that is, trading is one day cricket match. That is really surprising to see. The thing is that you choose across a one particular stock that is going to provide you a better set of return on that particular day, and you choose the right set of player. That's how you go across to purchase the right particular set of share that is going to provide you a better set of return. Whereas investing is just like a test cricket, where you are going to invest in one the different set of players or one unique player, and you are going to invest in on hold on for a longer period of time, and he is going to provide you a much better yield in the future period. The one who do traders and investor, whereas trader do money in stock for a short term, they buy and sell fast to hit the higher profit. In marketing, missing the right time lead to loss. In case the trader is not going to market the profit at the right set of time, and he's going to and literally face the loss. Whereas investor who keeps away from trending and invest in values and invest for a long period and achieve his goals. So friends, if you like my video, do contact us on 8220333324. Like it, share it, and subscribe it. For more updation and information, do contact www.agroup.com. Thank you.